So we are beginning with our next panel discussion. We have Mr. Aman Singla, Head Transaction Banking Group from CSB Bank Limited, Mr. Anupam Verma, Chief Executive International Banking Unit, Gift City, and Head International Financial Institutions Group, ICICI Bank, Mr. Kalyan Basu, Managing Director and CEO of Vayana TradeXchange, and this session will be moderated by Mr. Vikrant Kulkarni, Principal Consultant from the Digital Fifth. So all the members are here on the stage. Over to you, Mr. Vikrant.
Hello. Yeah. Thank you, everyone. Good afternoon. To be here, and I thanks a lot from all of us to be here and to be supporting us through the great crowd. So we have a very interesting panel here. So we are going to discuss on the international trade finance for seamless global payments and global market rather from the perspective of ecosystem and the platforms which are there. So I have very interesting questions to ask. So we'll run like that we'll have some questions to be asked, and then we'll open it for the session for any questions from the audience as well. Yeah. If I want to talk about the participant at the panel, I have very much industry leaders and who are experienced into it. So I'm also looking forward to learn a lot from them. Starting with Aman sir, I would like to just ask you on about one question. Like today, the small businesses are very prominent in the making their place into the ecosystem. Yeah, they're trying to go abroad and do the cross-border trades as well. So looking at that, how do you see that market is getting flourished?
Thank you, Vikrant. Good afternoon, everyone. I think it's a very interesting question because today everybody is focusing on small and medium enterprises as a business segment. And the fact that these customers are looking to expand their businesses globally speaks volumes about their ambition and the fact the kind that they can compete with the best in the world. But for that to happen, there are a few things that need to get, that needs to be captured at their end. One, globally, if you see that the trade finance gap is about $2.5 trillion, and roughly about 45% of that is in Asia. And in India, only 20% of the SMEs probably have access to the bank finance, or we call it the formal finance, right? So for these players to participate on the global arena, they need to be well-financed and well-funded. And, the problem starts there. When you talk about these clients being well-funded, traditional banking, we follow the normal balance sheet analysis and the collateral requirement for these clients. And most of them normally don't have a good collateral cover to be given to the banks. These customers basically, then end up, taking normal financing, or the financing which is not good enough for them to go abroad and take their business to the next level. The point is that SMEs, we normally keep saying SMEs contribute to about 40% of the GDP and 48% of the exports and everything. But if they get these financing done, I'm sure they'll be able to do a lot more, and they'll be able to contribute a lot more to the overall economy and to their own ambitions of being larger companies in time to come. The appraisal process has to change within the country. The credit team normally looks at them as a client they don't have a very good credit history. Probably they don't have a financial inclusion to that extent where the relationship with the banks is on a longer period. They are not large customers where they can take a call on those customers. So our appraisal process has to change. The way we look at these clients will have to change, and basis that, the government will have to come out with some kind of more schemes on the clients on the export side. Even though government is supporting them through CGTSME, which is a unsecured kind of a loan, but it is more on a domestic basis, but not on a cross-border transaction. So there's a lot of work to be done on that side.
Got it. I would like to understand from Anupam as well on this because, of course, considering the customer segment and the variety of experiences you would have, what are the key pain points you see in the market, which are holding up this potential SMEs who are the aspirants basically?
So thanks, Vikrant. First of all, I would like to compliment Shashank, Samir, and the entire Digital Fifth team. I think I'm coming to this event for the first time, and these both, the scale and scope of the event is amazing. So congratulations to all of you for putting it together. Coming to the discussion, I think, if you look at from the government perspective, they're talking about exports going from about $400 billion to about $1 trillion, just the merchandise. Of course, overall, they're talking about $2 trillion. And if exports have to go from where they are to where we want to be, clearly SMEs will have a very important role to play. Today, the issues and the pain points that SMEs face are multifold, starting with issues in terms of access to market, access to information. Then you have regulatory and documentation compliance issues. Then you have issues around financing. So I think SMEs struggle at each and every part of the entire chain when you look at the entire trade, cross-border trade that they do when they export. And how we have looked at solving this problem for SMEs is by two ways. We have moved away from a traditional product approach to a customer-centric approach. What do I mean by that is we have created a platform called Trade Emerge, which is an open architecture platform available to both customers and non-customers, where SME, which is starting to think about export, can start their journey in terms of incorporating the company, figuring out, if this is a commodity they want to export, this is a market, what are the regulations, what is the HS code, what is the regulation required for exporting that. Then going to the next step in terms of discovering customers. Once you discover customers, you can find out the credibility of that customer through different reports. Then the role of financing comes, which I'll talk about in the second part. And then, logistics, infrastructure, and post-transaction compliance. So we have tried to create one platform where an SME who is looking at doing an export in a meaningful way can actually take care of all the requirements. Of course, bank is not doing it. We have multiple partners who are supporting us, but eventually the thought process is to look at it from the customer's perspective and see that how do we, help the customer end to end. So that's one approach which we are taking, and we have got a good response over the last couple of years. Second is in terms of awareness, in terms of the export financing structures. So if you look at about $400 billion of exports, almost just about 10% happens on LCs. So still a lot of education which we are doing through to our SME customers to figure out, to tell them that these are the countries, where we have tie-ups. We work with almost 400 banks across 60 countries for handling their LCs. That's a traditional product. But if you look at 90%, that's open account, which is where we are working with a lot of our customers to see how do we help them in terms of open account solutions. We have a tie-up with FCI, through which we have access to the import factor in different countries, US, Europe, Asia, Japan, Middle East, almost comprising almost 60 to 70% of India's exports. So I think a lot of education is required, which we are doing to see how some of these new financing solutions can be relevant to the MSMEs.
Sure. Thank you. Thanks a lot. So, Kalyan, I wanted to understand, would like to understand from the solutioning perspective, how do you see these pain points are getting addressed, and what are the new things that are being attempted to address the challenges from the international trade perspective? So, from the Vayana being, Vayana is being one of the leader in that space, would like to understand a bit from you as well.
Yeah. So my other two esteemed panelists are from banks, and banks need no introduction. But I think we need a little bit of introduction. So of course, Vayana as a Vayana network, as you know, the parent company is well known across the financial segment as well as in the supply chain finance space. We have been there for a long time, and Vayana Network is the largest B2B supply chain finance platform today in India, doing a volume of 1 billion plus a month. And the heartening news is that though everybody talks about, the trade finance gap, MSMEs needs to be funded, it is a pleasure to share with you that out of this 1 billion that we do as a platform, mostly 80 to 90% is actually MSMEs who get funded through our working capital or banking partners, of which, of course, both of them are in our network, and it gets funded through them as well as other banks. So SME is a focus area for Vayana Network and Vayana as a group. And now coming back to what we do as Vayana TradeXchange, which the company that I represent. So we are a 100% subsidiary of Vayana Network, as I said, and we are a licensed platform, licensed by the new regulator working out of GIFT City, which is the International Financial Services Centers Authority. So International Financial Services Center Authority is the financial regulator in GIFT City, first attempt of its kind to build a financial hub like Dubai or like Singapore or like Hong Kong. Yes, we are at a nascent stage. The hub is at a nascent stage, but I can tell you, if you visit GIFT City, you will appreciate the way it is growing. And we have been really very, very fortunate to have this license provided by IFSCA to facilitate cross-border trade on our platform, which is called Vayana TradeXchange. Now, coming to what do we do as a new product, you asked me. So this is something of a unique, kind of a solutioning that has been thought about by the regulator. And as we say, we are a licensed entity to finance, facilitate cross-border trade. So what we do is we onboard buyers, we onboard sellers, and we onboard a host of financiers on our platform for financing of their cross-border trade. We have we have got the commercial license just in the month of June. So we are up and running for, you can say, approximately 6 months. We have done around 200 transactions already on the platform. We have 10 financiers already onboarded on the platform. And the volume, of course, humble beginning, we have done something around 7 million till now. But I am sure with this endeavor picking up, and as you come to know about this more and more, as we speak in various forums, we try to really convey through various export promotion councils. As it grows, I am sure it has a huge potential, because the seller, buyer, and the financier that I am talking about is not about India alone. So, of course, we are helping the Indian MSMEs. All our customers, if you see, the exporters that we have funded on the platform are MSMEs today. And they have been funded by factors, they have been funded by banks, they will be funded by banks. Yes, none of the banks have yet funded on the platform. It is the factoring companies. And we are really very grateful to the factoring companies as well as the banks who have onboarded us, ICICI Bank being one of them. And we are thankful to you. And I'm sure we will be seeing transactions happening on the platform by them as well. So this is a very, very unique concept. And as we go along, we will talk about it. We have export factoring product. We are trying to have import financing product on the platform. As we go into the detail, we will talk about the products as we go along.
Sure. Thank you. So Aman sir, the question was from the perspective is like, there are the problem points that we discussed. There are solutions which are also coming up. But how do you see looking at the current things which are happening, the ups and downs which are happening globally in the global market? Looking at that, how the AML and FRM are playing its major role into the supply chain sector per se, from the trades perspective?
I think so. The biggest concern that we normally have when we do a cross-border transaction is with respect to your transaction being prone to money laundering transactions or trade-based money laundering or fraud, in the sense that how are the parties related to each other and how are they doing business, and whether they are sanctioned entities or not. So very, very critical that the basis premise of trade finance is to do transactions which are secure, which makes the transaction very secure, and to ensure that they are not prone to fraud. Because today what Kalyan sir was talking about in terms of financing through their factoring companies and other players, in case it's a proven fraudulent transaction, the transaction is probably deemed null and void. So it creates a ripple effect in the entire value chain the moment a transaction is deemed as a fraud, right? So now today in India, a lot of people import and export, and RBI is very, very strict with respect to your regulatory compliances. So any goods going out of the country needs to be reported to RBI saying that all the required documents have come into the country, and when the goods coming to the country, all the required documents have been submitted by the customer to the banks, right? That is very, very important. Otherwise, these kind of transactions are open to fraud, and there are a lot of transactions which happens where the customers on purpose try and circumvent the system. And that's the point where we are all struggling, because not everything can be tracked manually, right? You need to have systems, platforms to ensure that all such transactions are tracked and can be, the biggest problem is the pricing of a commodity, right? When you buy or sell any commodity, what pricing is there? Because a lot of commodities which are not available on the exchanges or globally available, right? Or they're not available the way it has to be. Some very, very small items that they have no price available. So sometimes you end up over-invoicing certain things depending on which side of the trade side you are. You end up over-invoicing or under-invoicing. All these leads to, a kind of frauds and kind of, laundering of money. So this is very, very critical that we ensure that during the entire process, the entire chain is only as strong as its weakest link. And the fraud and the money laundering is one link which can create the entire supply chain, bust. That's...
Yeah, thanks. So Anupamji, the question was running in the mind, like looking at this, it looks like digitization is one of the solution which is out there. So how do you see the fintechs are entering into it, and what are the new initiatives those are been taken up as a part of digitization of this sector?
So, when it comes to cross-border trade finance, while the end-to-end digital journey for the entire trade is still some time away, but I think we have seen a couple of areas where work is done. One, of course, in last couple of years, the adoption of the trade online platform of the bank has gone up. And if we talk about our own trade online platform, which has more than 40 services, it's a comprehensive digital platform where customer can, give application for issuance of LCs, bank guarantees, settlement in terms of export proceeds and so on and so forth. So there we have seen, good adoption, I would say, last couple of years. Another area we have seen good adoption is what we call ELC or LC Vault, where for an exporter, all the LCs which are there, it's like a warehousing which is done electronically. And in case an export LC comes, almost real time alert goes to the customer, So I think some of these areas adoption has been good. Couple of more areas where work is happening, and I'll talk about the larger stakeholders, both in terms of fintechs and non-banks. I think there's a lot of work happening around corporate SWIFT. I think till now, very few large corporates have adopted, but I think that's one good way for an authentic, secured exchange of messages when it comes to, LC's bank guarantees. I think there's some work happening on that. Some work which is happening on trade APIs, where corporates can actually link their ERP and give instructions to that to the banks and to multiple banks. Apart from that, I think we saw, blockchain being used for both domestic trade as well as cross-border trade, when it comes to LC-backed as well as open accounting. I think still some time away, but for example, all banks, almost 18 banks have come together and created IBBIC, where some work is happening around that. In fintechs, if I talk about, I think some fintechs are trying to solve some problem in the entire trade finance, trade value chain. For example, TradeStream is looking at using using digitization and automation for document scrutiny to reduce frauds and improving the entire efficiency. There, we talked about ITFS and the exchanges which are there, which are looking at creating a platform like we have in trades in domestic to see whether, these platforms can be used for improving the entire efficiency. Then there's a lot of work which is happening around electronic bill of lading. I think some countries have approved it. We recently did a test transaction, for example, between India and Singapore, where one of our customer was importing. So ICICI Bank India issued the LC all electronically, and we had DBS Singapore on the other side, and the Maersk, gave the electronic bill of lading. So entire transaction was done electronically end to end in terms of presentation, discounting, and everything. But yeah, I think some of these initiatives are still, I would say, not reach scale. But the way we are seeing each of these initiatives either improving, efficiency, convenience, speed for the customer, and some other initiatives looking at reducing frauds and mitigating the risk, we believe we will see scale from them.
Sure. Thank you. Kalyanji, I wanted to understand from you that how this digitization is going to bring the more transparency, and as even the Anupam ji was saying that it will add more efficiency. So what are the things that you think will be able to boost the speed of the way the trades are happening, and it will help overall the ecosystem as well?
So as a platform or as a marketplace, as you all understand, marketplace is today all pervasive. So whether you talk about B2B, whether you talk about B2C, B2C of course is infested. You cannot think about anything without a marketplace today. And in the space of B2B, yes, there are many marketplaces which are coming up for various usages. And of course, cross-border is a unique and, I can say, solution that is being promoted now through these ITFS platforms being licensed by IFSCA, which is ITFS stands for International Trade Financial Solutions, Trade Financial Services, and of which Vayana TradeXchange is one of the part. So what do we bring on table as a platform? What is the additional thing that we bring on table? See, as a licensed entity, we completely take care of the KYC AML part of the sellers or the buyers who are onboarded on the platform. And when I talk about KYC and AML, I am talking about exactly the same requirement that the banks are supposed to do, because the same KYC guidelines are also applicable to us. So that means the entire KYC AML responsibility now is with us. So when you do a transaction on the platform, you are sure about whom are you dealing with. That is the first part. Second, it is very pertinent that cross-border is infested with frauds. There are so many instances of frauds which have happened over the years. Whether at a point where digitization was not there, there was no dearth of examples, and with the digitization being there, there are no dearth of examples. So no matter what we do, yes, whether we can make the system fraud-proof, maybe not. But whether we can go nearer to that is something that we can try out. I think digitization actually helps in reducing fraud to a great extent by making the system transparent. So when we talk about an e-bill of lading being issued digitally, then there is a huge security aspect which is already taken care of. That means the entity which is actually generating this e-bill of lading or the electronic bill of lading is doing it on behalf of a customer who they have already scrutinized. The e-bill of lading, the bill of lading, as you all understand in cross-border trades, has multiple touch points. So it is verified and its credentials are scrutinized in each and every touch point, but fast. Today what is happening, see, from time immemorial, we talk about 3 copies of bill of lading. Now the first question is, why do we talk about 3? Why cannot one do? What is the use of the other 2? Because no bank is going to accept without the set of 3. So what do we do with these 3? If we reduce these 2, millions and millions of pages will be saved. So I have not, being a trade finance practitioner for long, I have really did not understand why this tree is necessary. I do understand at one point of time maybe this tree was necessary when the bill of trade lading as well as the goods traveled in the same mode of transport. There was no other mode of transport. Means the bill of goods will also go by ship, the bill of lading will also go by ship. So, but then we have come a long way. So I think that is something that digitization will actually do with all the 3. And I think, as Anupam ji said, lot of work being done. Singapore, see, Bolero, I don't know whether you are aware of the organization called Bolero, which has been trying for this for a long time. Now, why has this not happened? There are many reasons. One, maybe the enabling act around it was not there. Now, as pointed out by Anupamji, that enabling act is already there in Singapore, is already there in UK, is already there in some of the, in UAE, and some of the other countries are also implementing the act. This enabling act was absolutely necessary to make e-bill of lading a real possibility. I think that is going to happen very soon. It has started and it will happen very soon. Similarly, on the other front, if you see that act, then it doesn't talk about bill of lading alone. It talks about all negotiable instruments. It actually changes the entire way today financing is done. Today, the way it is done is, if you have a usance export bill, all of you who are in cross-border trade will understand that you send a bunch of documents through courier, it reaches there, then the bill of exchange is placed, he signs, he gives back, and then, a SWIFT comes, and then the fund is released to the exporter, acceptance. All this can happen, if all this can take as long as maybe 10 to 15 days to actually get completed. If you have a digital system which talks to each other, then it can happen over minutes. And I think the enabling provisions are there now. The enabling act is there now to make it happen, and it makes not only it is eco-friendly because it saves a lot of paper, it also saves time and cost, and it is also secure. So it's a question of reimagining the world. Today, what I find is export finance means go to the bank. Why it should be over centuries like that? As banks, of course, banks are trying their best over centuries to provide the exporters with financing. The government is trying. But is it only the banks who finance everything in this world? So a hedge fund or a family office or a fund house can fund so many things, or a pension fund can actually invest in so many things, but they cannot take part in export finance. Why? So we need to actually reimagine things if we really want to bridge this 2.5 trillion gap which Mr. Singla says, and maybe to reach that 2 trillion plus of exports tomorrow or in the next 5 years, as we, as a nation, aspire to. So reimagining is absolutely necessary to really reach there from where we are today. Another point that Anupamji pointed out is open account transactions. Now, which bank finances really have a product for open account, where the seller directly sends the documents and the bank doesn't have control over the goods or the transit? Very few. And as he says, LC is only 10%. So that means, and that is maybe the reason, if you see the data, then you will figure out that overall bank finance, the non-food finance is touching around 1,60,000 crores. Export finance is not even 3% of it. So now it is time that we reimagine how export finance will have to happen, how SMEs are to be funded. It cannot be that the bank has the only liability and the responsibility to fund. There has to be some others also coming up and sharing the responsibility.
Sure. Thank you. Thank you. Yeah. So, Anupam sir, maybe one thing would like to understand from you. I mean, the future looks promising, and there are a lot of things that can be improved. So, while the improvisation will happen, there are a lot of government support is also being taken care of, be it regulatory or be it support from the government directly to boost the MSMEs, or in the context of global market, opening the global market for them through the trades. So would like to understand a bit from you that what are the top initiatives on your mind which are making the maximum impact in the market or the businesses?
So I think, we talked about $400 billion, aspiring to reach $1 trillion. I think within that, government is playing a very key role, apart from the infrastructure creation, which we all talk about in terms of roads, ports, and so on and so forth. I think I would like to talk about 2 or 3 examples or initiatives. First is the new foreign trade policy. If you look at the old foreign trade policy, the focus was largely on subsidies. Now the entire approach is very, very different. That entire approach of the new foreign trade policy is, on one hand, improving the entire ease of doing business. And the other pillar is export promotion. So what I mean by ease of doing business is a lot of simplification which has happened in terms of compliances, regulations, documentation which is required. There's a focus on, we all know EDPMS, IDPMS, but also we are talking about digital certificate of origin, which the government is trying to kind of, create, which can be used. So that's one part. And the other part, which is equally important, is the export promotion. So the way you were saying, India is signing FTAs. We have signed FTA with UAE, Australia, to name a few. UK and a couple of other countries. EU is in the pipeline. So the objective of signing all these FTAs is to actually promote exports, and within that, how MSMEs will be able to take, a leap forward there. The second part of export promotion is the entire focus on leveraging, public-private partnerships. So they are talking about collaboration between the government, the embassies overseas, and different MSME bodies to kind of promote and giving incentives and subsidies around that. One more area which I want to highlight about the new foreign trade policy is the e-commerce. If you look at the old foreign trade policy, there was no, talk about e-commerce. And if you look at the data, out of the entire e-commerce that happens globally, almost 20% is cross-border. So clearly, if we have to, scale up exports in a meaningful way, e-commerce has to be an important part. So again, there's a lot of discussion there around how the entire processes can be improved. Beyond that, the examples that we're seeing is, for example, ONDC. Now, ONDC is looking at tying up with Proxtera, which is a Singapore-based platform, which will also give access to the MSMEs which are on ONDC to connect with the counterparties in so many other countries where Proxtera is there. So that's on the foreign trade policy. The second area, which is commendable and is kind of moving forward very well, is the PLI scheme. So there we have seen, for example, electronics goods. I think there's a lot of talk on how exactly the PLI scheme has been, an important constituent and component of government's policy to not only increase the manufacturing composition of our GDP, but also kind of to create a base for improving the exports.
So just to add to what Anupam said, government is also kind of motivating banks to take up ECGC covers for their exporters, right? So, and they have gone to the extent of saying that they are willing to look at the premium that they charged to the clients, and also to the extent that they are willing to give about 80 to 90% for MSME clients as a kind of a coverage for the kind of bills that they raise and invoices that they raise. So that is one important initiative which the government is trying to push through. Second is, they have come up with one district, one product kind of a initiative where they started 75 districts at all to push export business across the country and to go to the hinterland where we actually have a lot of, exports, a lot of our products which are being made there. And to add to that, they have also come up with the policy on geographical indicators of commodities which are there in the country, which can be exported, which are very specific to that geography, right? That is a USP which the government wants to push through and also at the same time push Make in India kind of a concept globally. I think that is just, I wanted to add on to that. Yeah.
Sure, thanks a lot.